Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. As we come into this week, it's going to be a big week. We have the FOMC meeting coming out, and the Fed is going to have a lot to cover to keep the market stable. I'm starting to see some risk flowing into the marketplace, and the Fed is going to be focused on where to taper. I believe they're going to be looking at MBSs and the mortgage sector, as that's going to be an easy place to back up on some of the purchases and let those rates float a little higher. So we're likely to start to see that tapering in that area. One of the big discussions this week after the meeting will be the dot plots, and depending on how those come out, we'll start to get a feel for maybe where the overall Fed is looking at doing some tapering. Most folks are expecting that maybe early 22, and I've seen estimates all the way into 23 before there'll be anything significant. But this is also going to be dependent on this so-called transitory inflation. We're going to get PPI out this week. That's going to have an impact on a lot. Now, they already know all these numbers. So when they come into the Fed meeting, they're going to be discussing what type of actions they're going to need to do to keep this thing under control without shaking up the market too much. They don't want to do that for sure. A hiccup in the equity markets or even in the treasuries could set the tone for a little more difficulty, and I think they want to avoid that, at least for the moment. But they will start to focus and discuss some of these aspects that I'm talking about. The good news is on Wednesday, we'll be live doing a live stream during the Fed meeting, so we'll have plenty to talk about on that meeting. But as we also come into this week, as I mentioned, PPI is coming out. We also have retail sales coming out, expected to show a 0.2 increase. PPI is expected to show 0.6, so continuing to be hot, like with the CPI that we saw the other day. We're also looking at capacity utilization coming out at 75.3 and industrial production to be up 0.6. So these are all going to be metrics that are be looked at, but the Fed already knows these things. When we come into Wednesday's conference call, they'll discuss all of these elements on the typical statement that Powell will make, and then there'll be plenty of questions that come out. Maybe there'll be some substance there. I don't expect a lot, but definitely the dot plots are going to be looked at very closely, I think, in this meeting. The other reports we'll be looking at will be the typical claims numbers that come out on Thursday. We're expecting to show 360,000 there. We saw continuing claims downtick pretty decent last week, down to 3.49. Still looking at a 3.2 or less there to be material and start to tell us some other elements about the employment numbers. But as I mentioned earlier in my commentary, I do expect to see some struggles come into Q3 and definitely in Q4 as we start to get toward the end of the year. That we're going to be watching is a lot of the rhetoric coming out of this infrastructure deal, which I expect will stay in limbo for a while yet. I don't see them getting anywhere close to an agreement. There's just too much noise in the conversations right now, at least from my viewpoint. The final thing I'll mention, we did see some positive rotation in our database. I'll go through all the details in a minute. While we're continuing to see a stable market from our database viewpoint, we are approaching some levels that could become somewhat risky. I'll discuss all this here in the commentary tonight. Let's take a look at the charts, see how they're set up for this week. As I begin with the WaveTech Database review, we did run our weekly models on Friday night. We saw 957 new buy signals, 189 sell signals. As I mentioned in Friday's commentary, I did expect to see some slight increase. We're now at 75.14% bullish. As we go to the daily models, We saw 472 new buys, 222 sells. We're up to 64.22% bullish. We continue to remain above 0.62. So overall, as I mentioned in the opening comments, that our database remains very positive. We're still seeing some rotation in on the intermediate charts. The metrics on the intermediates are a little bit long in the tooth, but there still appears to be some left in there. And the risk that I'm seeing here is that in the next couple of weeks, we're going to need to move the daily database above the 68 to 72% level, or otherwise we could have some issues with a negative rotation starting to set in. So the next 2 weeks are going to be very critical. As we review the S&P futures, they are up 2.5 points overnight. We're at 42.39. This will be the September contract that I'm covering now. We're seeing PPM1 cut through its second derivative, so we're seeing a little bit of positive, but PPM2 has set back substantially out of trend mode. We're continuing to just grind higher in this pattern. The other concern that I have, and the reason why I discuss any type of weakness here, is we're seeing a narrowing of the market grid. This is much more pronounced in the cash market. As we look at the market grid on the futures for today, so far overnight we've had a low of 42.37, a high of 42.43, so we've printed an R1 overnight. S1 is 42.30. I expect to see an S1, R2. Overall, the markets are likely to remain positive as we come into the Fed meeting on Wednesday. As I review the SPX, we did see a big increase in PPM2. That's going to come back in just like the futures did overnight, but the PPM1 should start to move higher. What this suggests is that the key support level now in this pattern is the key support level will be around the 42.23 level. As we look at the market grid for today, 42.26 is STX. That would be the extreme. That also maps out fairly close to where the 10-period moving average will be. As I'm expecting in the futures, I'm looking for an S1, R2, S1 42.42, R2 high at 42.58. So continuing to see this market move slightly higher. As we look at the market grid for taking a look at the weekly pattern on SPX, we're also seeing a massive contraction on the weekly grid, and this is somewhat concerning. The range that is expected this week is for an extreme on the downside of S2. R2 42.73 is the most likely. The RXT for this week is right at 4,300. We should continue to move higher. The PPMs are all in very positive mode, so there's a good underlying trend, with the key demand line is right around the 42.20 level, which is the level that I talked about just a few minutes ago on the STX number. Next market that I'll cover is NASDAQ. NASDAQ is up 1875, up 0.13 overnight. We're seeing the market move up into the R1 level, which is 14,018. S1 13,952. So we've traded above that. My expectation is an S1 R2. We could see it move up to around 14,055 today. As we look at the PPMs, we're seeing the PPM starting to accelerate. We're at 0.26, 0.22, and 0.02, but we are seeing the PPM3 move up through its first derivative. This is all very positive from a general trending viewpoint, and this is likely to keep the NASDAQ a bit in the lead over the Russell in the next several days. S1 13,904, that would be your extreme for this week. R2 14,158, possibility of an R3 14,250. With the Fed coming out this week, I do expect to see a generally positive market unless there's some surprise that comes out on Wednesday's meeting. The final market that I'll cover tonight is gold. Gold continues to move down toward the major support that I talked about last week around the 1855 level. We're seeing the STX for today at 1855. We also have the 200-day moving average at 1851.80. So there's a cluster of numbers right here coming into this market, but we have entered into a downtrend mode on a short-term level. So this suggests there's going to be major resistance at the 1890 level. As I mentioned last week, I thought the major resistance would be around the 1904 to 1915 level on an extreme. As we go to the weekly chart, we'll see here that we go to the weekly chart here, what we'll see is last week the high was 1906, so we traded into that range. As we start this week, we're going to be moving down towards some of the more extreme support on a weekly basis, as the PPMs are still very positive. So the primary demand line for this market is going to be 1842, and that number, it will be rock solid. As we look at the market grid for the week, 1844 is S3. So if we do get through S2, which was basically at that 1855 level I just mentioned, we could see an 1844 level. At that point will be a new entry. If you took profits up around 1900, then that would be a place to re-enter the markets around that 1844 level. And I would even preface it that between 1856 and 1844 is going to be the bottom of this particular downward sequence. This will complete the video for tonight. Thanks for watching. We'll talk to you tomorrow night. Hey folks, if you enjoyed this content, make sure you subscribe, hit that like button and the notification bell so you'll know when I do these videos.